within the Eurozone, you know, was absolutely astronomical. The US at 32.5% there or thereabouts. And
I'm placing an order to buy euro at 117.29. Order placed to buy euro at 117.29. Okay.
That narrative further, which is to say we really were seeing what looked quite a concerning spread of the virus in the US, and we weren't seeing anything near the same in Europe. We've just had some early indications that maybe things aren't as under control as would be hoped in Europe, and you know, the extent to which that continues and gets worse will definitely feed back into that narrative.
James, the optimal way of playing this divergence and or convergence in the coming months, is it through equities, is it through FX, is it through the bond market?
I think FX is, I mean, the dollar, it was a quite dramatic period, really, of dollar weakness that we've seen from the peaks of the dollar at the back end of March. Some of that was just unwinding of all of the funding conditions following Fed's actions, and that makes complete sense. Latterly, it was that narrative that you refer to, I think, which was really pushing the dollar further and further down. But history says that that's actually quite a difficult narrative to maintain for any period of time, just given the nature of those two major economies, the Eurozone and the US. One's a big current account deficit country, consumer of last resort. One's a big current account surplus region, and their sensitivity to FX, therefore, are slightly different, and that makes a euro-dollar rally quite difficult, certainly difficult in a period where demand is as weak as it is. Just on a short-term technical basis as well, I think it was fair to say that, you know, things like RSI were making euro-dollar look incredibly overbought, and it's normal for markets to take a breather at that stage. Whether that then becomes self-fulfilling and self-fueling on the downside for euro, again, I think that probably goes back to virus data in the near term.
James, meanwhile, on the U.S. side, you've got the Federal Reserve pushing investors deeper into risk, the sort of search for yield at any cost. Do you think that that's gone too far? Is there anything that can disrupt that, given the willingness of the Fed to continue with their programs?
Yeah, I mean, has it gone too far? I mean, I've been thinking that forever and a day. It really isn't something that I've been feeling since March or April. It's felt like that this, you know, an investor willingness to completely ignore fundamentals, completely ignore the balance of risks, valuation metrics, that's just been with us for so long now. It's become part of the fabric, and you know, that becomes self-fulfilling in and of itself. So I'm still an investor. I still am seeking to understand what risks I'm taking, how I'm being rewarded, and I think most pricing, when it comes to looking at yield across various asset classes, I think most pricing has definitely gone too far given the future that I'm expecting.
I mean, John, we can fold this in with Mr. Athey over to Mr. Kaplan of the Dallas Fed as well. I want to talk, John, about a small business, and by that I mean only 9,000 employees, and this is Spirit Airways, symbol SAVE, S-A-V-E. And John, these are the adjustments. I get it, the airline business is cratered. I get all that idea. But the bottom line is 20 to 30% furloughed speaks to that fragility out there as we go into the Friday jobs report.
And Thomas, that phrase we hate, right size. They've got to cut the size of the business, cut the size of the airline. These companies are starting to right size for the reality that things aren't going back to normal anytime soon. Something that's stuck with me for the last 3 weeks, Toms, is a quote that came from JP Morgan's Jamie Dimon, when he said the following: "This is not a normal recession. The recessionary part of this you're going to see down the road. You will see the effect of this recession. You're just not going to see it right away because of all the stimulus." That's stuck with me for the last 3 weeks. What does the back half look like?
You know, I want you to go to James on this, John, but to me what's so important here, folks, is our focus on somebody that employs 800,000 people or somebody who employs 260,000 people. John Farrell, this is about small business like this airline company.
James, there's going to be more. And I think the big issue in the previous quarter is that we saw joblessness surge, but disposable incomes, they held up, James, and they held up because of fiscal stimulus. And so many people benefited from that fiscal package. The back half, this idea that we've seen off the big cyclical test, James, have we?
No, absolutely. In my opinion, absolutely not. I think, again, there's so much noise, and you describe it well. We've seen surges in some of the data series just because it's a mechanical fact of life. When you shut an economy, people are not going to work. We've started to work through that process. People are going back to work. But as one of your clips that you were playing just before I came on was saying, I think it might have been Mohammed Al-Arian, we're starting to see early evidence that the recovery is flattening off, and you would fully expect that. The backbone of every single economic cycle is employment. That is the longest term indicator which trends alongside the economic cycle. And we understand why that is, because that's the nature of the cyclicality of an economy. As more people are put to work, they have more money to spend, demand goes up, employers, producers need to increase capacity, so they need to take on more people to do so, and that feeds off itself in a positive fashion. But we also know that feeds off itself in a negative fashion when jobs are being shed. And as you've already described, because of fiscal policy, let's not call it stimulus just now.
Long position open at euro, on euro at 117.29.
We think we understand where the limits of fiscal policy might be. Today, as we sit here, it feels like we're in a world where politicians, governments across the piece do not see that there are limits on the quantity of actions that they can take. And that means that if they're prepared to continue putting money into consumers' pockets, the impacts are going to be vastly different from what we would normally expect in the short term. What problems that creates for the long term and the potential for huge moral hazards, huge deficits and debt loads to be serviced, that's a question for another day, but that's something that I think we do also need to consider at this juncture. So very tricky, very difficult.
Hey, James, the conversation will continue. Our best to the team. James Atty there of Aberdeen Standard Investments in your Treasury market right now. Yields up, curve steeper, up 6 basis points on a 30-year. Tom, I spoke to Bob Michael of JP Morgan Asset Management on Friday, and I said, what's going to cross the 1% line first, the 10-year higher or the 30-year lower? And he said, are you kidding? The 30-year below 1%. And then he went on to say he thinks the 10-year yield in America, nominal, not real, can turn negative. Negative nominal 10-year yields in America over the next couple of quarters.
This is the arch battle, John, and you and I have got these people lined up. Steve Major at HSBC, Gary Schilling has been, courageously brilliant for decades. But J.P. Morgan's really led on this under Joyce Chang's leadership. Jan Loeys wrote the definitive piece on this, and Michael's on that trajectory with him.
10-year right now, 56 basis points. Coming up on the program on the fiscal effort down in D.C., Leslie Vinger Murray of Chatham House from New York City this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Microsoft is trying to salvage a deal to buy the US operations of TikTok. CEO Satya Nadella spoke to President Trump about how to secure the administration's blessing to buy the popular but besieged Chinese music video app. The president had floated the idea of an outright ban on TikTok on national security grounds. Now Bloomberg's learned the White House has given the companies 45 days to hash out a deal. The UK is reviewing its options for fighting coronavirus flare-ups. According to the Sunday Times, a London-wide lockdown is being considered if cases continue to spike there. Local government secretary Robert Jenrick says he's not aware of that plan, but he says restrictions imposed in northwest England show that the government will act when and where necessary. The Japanese owner of 7-Eleven convenience stores has agreed to buy Marathon Speedway gas stations for $21 billion. Seven & I is betting that an expanded U.S. footprint will deliver growth in the midst of the pandemic. Marathon is joining other energy companies in getting out of the retail business. And NASA has completed a triumphant return to U.S. space travel. SpaceX Dragon capsule splashed down into the Gulf of Mexico with 2 astronauts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Been working on the strategic future of the company. We're long past the stockpiling phase now in North America, and what we're seeing is big shifts from category to category. So things like hand hygiene growing very quickly.
Just give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
They have a $200 proposal, which does not meet the needs of America's working families. And it's a condescension, quite frankly, because they're saying, really don't need it. They're just staying home because they make more money at $600.
Speaker Pelosi pushing back on ABC this week. That pushback will continue through this week. The blame game very much ramping high down in Washington. From New York City this morning, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's your price action. The squeeze on the S&P 500 continues, up 0.6% on the S&P. Just in the last hour, Treasuries really deteriorating. Yields high by 3 basis points on 10s, up around 5 on 30, 0.56%. As we begin a new month, the dollar comes back as well. Euro dollar down to 117.24. Some broad-based dollar strength, Tom, going into some messy talks down in D.C.
Yeah, no question about it. And, of course, steepening of the yield curve as well. And, of course, we'll talk to Mr. Kaplan about this at the Dallas Fed here in a bit. Right now, we've been doing the markets here with James Athey. Let's get back to the moment at hand for this nation, which is 30 million people, unemployment checks, aid, however you want to put it, income substitution. It's evaporated. Leslie Vinci-Murray joins us with Chatham House out of London with a huge focus on the United States and the rest of the Americas as well. Dr. Vinci-Murray, frame for us the urgency now for any and all. There just seems to be we'll get through this in a week or two. Do they have a week or two?
No, I mean, you think about a hot August summer in the United States, 30 million people out of work, a lot of people still engaging in those protests and looking for that check and watching the numbers, right? The big story is the virus, watching over 1,000 Americans dying every day and no sign of relief, no sign of schools reopening. Hard to imagine going back to work, even if there were jobs. There's going to be very little sympathy on the streets of America for a Congress that can't get its act together and agree a new fiscal stimulus plan that includes a very substantial commitment to sustaining those unemployment benefits. But partisanship is the name of the game. It's come back.
Yeah.
That bipartisan consensus that we saw initially, it's gone. And so, but there's a lot of pressure on both sides right now to firm up some sort of package.
Leslie, history is just littered with this. Whenever the crisis fades, the collective will to do more fades with it. We're experiencing that at the moment, except the crisis hasn't really faded much at all, has it, Leslie? And this is the issue. What is Plan B down in D.C., and how close are we to them actually talking about it?
Well, I mean, I think you can't stress enough. There is no sign, and this is, watching this from London, it is extraordinary to watch America really drive itself down the rabbit hole of this crisis. Plan B is, we're hearing some reports that maybe the White House has a plan to step in. It's not clear what that would be. It clearly has to work with Congress. But the Democrats have a strong incentive to hold firm, to ask for more, to ask for a bigger package, especially as they can see, right? Donald Trump's polling, not holding up against his vice presidential contender. And so I think it's difficult to see the end in sight, but there's tremendous pressure to at least have a temporary measure, and that's what we may well see soon.
Leslie, there's the potential policy failure on not passing necessarily an extension to the enhanced unemployment benefits. There's also policy failure that I think is incredibly important to focus on, one that you focused on, that is the lack of a virus policy. And you said that the bottom line is there still is no national plan for the virus, for fighting it, so we need the stimulus. How expensive is it that the United States does not have a cohesive policy on fighting the virus?
We're seeing the numbers, right? You've seen the number in fiscal stimulus. You see the debates going on in Congress, but the story of ongoing death, ongoing rising infection in so many states, and people just not being able to function, right? Not being able to lead their daily lives. I think there was a period in which there was something novel about it. There was really a rally around the flag. And then we had a moment of, the George Floyd moment, which really, I think, in some senses, galvanized Americans, brought them together, gave them a focus, and now it's getting long, it's getting expensive, and people are looking at September, right? They want things to begin in September.
John, this is so important to have Dr. Vinjamuri with us from London. It works, and John, you're nodding acquaintance with the city, and it's just real simple. Mr. Slack, representing the Prime Minister, begins to suggest a lockdown of London. John, that's first of all, is it doable, John?
This is a worst-case option. It was reported by the Sunday Times newspaper, Tom, a plan to seal off London. And let's be clear, we're not there yet. I want to emphasize that. But there's a narrative doing the round that the United States has a higher tolerance for infections than, say, the continent. And I think that narrative is just too broad for what is actually happening in Europe at the moment. On the continent, you might be thinking about Europe, the mainland. In the UK, Leslie, there does seem to be just as high a tolerance for some of this and to reopen and push further. The Prime Minister's backed away from that in the last week or so. Can you speak to what is happening in the United Kingdom at the moment?
There's a lot of pragmatism amongst the British population. You see some of the images of, people flocking to the beaches, whether it's in Kent or whether it's in Cornwall. But the reality is that most people are quite cautious. They're seeing that there might be more pressure, more shuttering, that there might be reversals. And I think the one thing that's good is that there is now some confidence that there's actually careful planning, A, B, and C. If that infection rate rises above a certain level, that there will be shuttering. There's still a lot of uncertainty, I think, around schools. They've said that schools are opening in September, that people are going back to work. A lot of uncertainty about how that actually works and what it will mean, especially in London, where you have so many people reliant on the underground and public transportation to make that happen. A lot of people planning to stay at home. But it really, I would say, is a very different context from what we're seeing in the United States. People largely feel that the virus is out of their daily life, obviously, with the exception of the most vulnerable populations or people in elderly care facilities. But life is, not normal, but it's acclimatized to a new kind of normal.
Learning to live with it. Leslie, great to catch up with you. Stay safe, won't you? Leslie Vinjamuri there of Chatham House. This goes back to something Lisa has talked about repeatedly. Lisa, how do we reopen if we can't get the kids back to school? And it's not just a story for the United States. It's a story for the world at the moment.
I'm living it. I mean, first of all, what do you do with their time? Second of all, how do you focus on work if you have kids who are at home? You're trying to get them off their screens. You feel guilty about that. You want them to be educated. You don't have the bandwidth to do it, John. Big questions, and frankly, not getting a lot of answers from officials because they just don't know. It depends on the path of the virus.
Tom Keane just hands the responsibility over to Mrs. Keane, and then leaves the house just earlier and earlier every single morning.
John, what's interesting
Literally
here
2 a.m. this morning, Tom Keane enters the building.
It's a perfect time for jokes, except this is deadly serious.
Tom, I totally agree with you.
Nationwide.
1,000%.
What upsets me so much about this is the politicians of all persuasions seem to be disengaged from the benefit inequality of what we would do with technology
Well, especially, Tom,
and virtual learning.
the politicians with the wealth to get someone else to take care of things for them.
Yeah.
It's a very different equation. It always is. On this program, up next, Dallas Fed President Robert Kaplan. Looking forward to that from New York City this morning. Good morning. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The volatility in the first two quarters were quite exceptional this year.
Part of it is participating in the better market opportunities that have existed in the second quarter, and we do expect a normalization of that.
The situation out there is still very challenging and very difficult to predict, so we should never be complacent.
From New York City for our audience worldwide, this is Bloomberg Surveillance Live on Bloomberg TV and Radio. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Here's the price action. 60 minutes away from the opening bell as we kick off August trading. Equity futures higher, much higher by 0.6%. A nice rally off the bottom in the last couple of hours. In the bond market, yields up by 3 basis points on a 10-year to 0.56%. And the dollar making a comeback, 117.25, euro dollar coming down 0.4%. In focus, a big payrolls report coming up this Friday. Ahead of that, an important interview with Bloomberg's Michael McKee. Hey, Mike.
Hi, John. And good morning to Robert Kaplan. He is the president of the Dallas Federal Reserve Bank, and he joins us on Bloomberg Radio and television from there. Good morning to you, sir.
Hi, Mike. Good to see you.
We'd like to start by asking about what you're seeing in your district. You've been at the epicenter of the latest COVID surge in cases. Yeah. What's happening to the economy there now?
Probably around mid-June, the sharp rebound we were seeing started to moderate and started to stall. That was coincident. It came at the same time and along with the resurgence of the virus. And so we saw cases increase. We saw hospitalizations steadily increase. That has started to moderate based on the numbers I see, the daily numbers I get. It started to moderate over the last number of days. But what you saw the state do is put in, and cities put in a backup or unwinding of some of the reopening steps, re-emphasize how important it is to wear a mask, and we saw some effect of that. But you're seeing a rebound that's stalling to some extent. That's what we're seeing in Texas.
Well, that caused you to do a rethink of your economic forecast. What do you see ahead for growth and inflation and unemployment?
Well, and because we were seeing it here and in a number of other states, it's still our view that will contract for the year at about 4.5% to 5%. It has been our view after a very sharp decline in the second quarter. We'd have very healthy rebound in the third and the fourth quarter. I think that rebound is more muted in the United States now. And it's caused me to think that the unemployment rate, if we don't do a better job managing the virus, the unemployment rate is likely to be above 9%, between 9 and 10%. So we've moved up our unemployment forecast. And so I think we've got a rebound, but it's much more muted than it was. And if we don't do a better job managing the virus, we're going to have lower growth and we're going to have a higher unemployment rate. And so I've been spending a lot of my time talking more about the virus than anything else because it's so critical to the recovery.
Well, the $600 extra unemployment bonus and eviction moratorium, they're gone now. First, has your staff modeled the impact of that on the economy? And second, should we expect a wave of defaults that might affect credit markets?
We have looked at it. And one of the things that's unusual about this downturn that we've just had is incomes have stayed relatively solid, and a big part of the reason is these unemployment benefits. And so we're normally in a downturn, you see a drop in incomes. We haven't seen that here. It's still my view that in some form we'll get an extension of unemployment benefits. So I'm quite hopeful that that will continue, but if it didn't, yeah, you would see a further weakening in the economy, and in particular because consumers wouldn't have as much money in their pocket to spend.
Any business people telling you that $600 bonus was keeping people from coming back to the labor force?
A lot of business people were telling me that, honestly. They were telling me that it was challenging to hire people. We've looked at a number of studies. We've done our own work. We don't see it as much in the data, but I can tell you I'm hearing it from business people. And so whatever the right answer is, I think you still are going to need to see extension of unemployment. It may be restructured to some extent from the $600, but I think it's important that we see an extension of it. And I think the increased incomes, while it may have made it hard for certain individual businesses to hire, it's helped create jobs because it's helped bolster consumer spending. So the net effect still has probably been positive for the economy and for employment.
A number of your colleagues, well, at least a number of epidemiologists joined by your colleague, Neil Kashkari of Minneapolis, say that we need another nationwide lockdown for about 4 weeks to defeat the virus, and that should be job one over reopening the economy. What do you think of that?
I probably have a somewhat different view based on my conversations, again, with epidemiologists locally and through the country, in that the epidemiologists I've spoken with, which has been widespread conversations, believe we could manage this economy and the virus and have the economy open if all of us wore masks. That's first and foremost, and then we need a good testing and contact tracing regime. But in particular, if we all wore masks, they believe it would substantially mute the transmission of the virus, and you would not need to do a widespread lockdown. And in fact, many of them fear if you did more lockdowns, if you still don't have good following of the healthcare protocols, the lockdown to some extent would be wasted. And so I think their advice is, be very careful about the reopening, enforce a widespread practice of wearing masks, social distancing. Now, there might be isolated or localized areas in the United States where the virus is become unmanageable, and they're going to have to take far more extreme steps like lockdowns. But I think we're going to have to learn to live with this virus. We're going to have to learn to re-engage in our daily activities, but still control the virus. But widespread mask wearing is essential to that. And I think it's probably the most important practice that maybe has been done unevenly. And we've lost an opportunity to recover and control the virus and grow faster.
We're speaking with Dallas Fed President Robert Kaplan on Bloomberg Television and Radio. Do you anticipate, President Kaplan, that the Fed will change its forward guidance perhaps as early as September and tie it to inflation running a little bit above 2% for a while?
I'll just speak for myself. I would not do that. We've already given fairly specific forward guidance in the form of our Summary of Economic Projections, the SEP, where we've made clear that rates are going to stay around the current levels for the next couple of years. I would far prefer, when we do give forward guidance in the future, that we tie it to our dual mandate, and particularly tie it to unemployment, along with making progress on inflation. But I myself would not be in favor of tying forward guidance specifically to inflation. I would not want to see us do that.
Old guys like you and me remember well, last time the Fed traded a little bit of inflation for lower unemployment, the Arthur Burns era. Are you worried at all that that might be a mistake?
The inflation dynamic is different now. Meaning, used to be as in the old days, as you say, when you had a very tight labor market and you were at or past full employment, you would see inflation. But the world has changed. The structure environment of the economy has changed with technology-enabled disruption, which has limited pricing power of businesses. That, along with globalization, has meant that the Fed has been able to run the economy hotter with more muted inflation. And so we've had to change the way we think about inflation, unemployment. And I've also been much more cognizant of underrepresented groups, lower educated, blacks, Hispanics, women with a high school education or less. By running hotter, we've been able to get these underrepresented groups back into the economy, back into the workforce. And I think that's been very valuable.
The primary and secondary credit market facilities have up to $750 billion available, yet you've bought only $12.3 billion in bonds. The Main Street program, you can buy up to $600 billion, but you've bought only $82 million so far. Why doesn't anybody want your money?
Yeah. So I've spent a good amount of time. For example, I've got a key role in the municipal finance program, where we have it's a $500 billion program, and we've put out, as you noted, a very small fraction of that. I think one of the features of the municipal program, the corporate bond program, is usage is not an indicator of the power of the program. Just by announcing these programs and making clear that we would help provide a backstop to these markets, you've seen a substantial rally and flow of funds into these markets to where the Fed pricing is less attractive to than market pricing, and the Fed hasn't had to actually purchase securities the way we might have thought. I think that's a good outcome. And I think the programs have served their purpose. On programs, on the other hand, like PPP, I think it's very critical that those programs got used. And on the Main Street program, I think over time, I think we'll want to keep getting feedback and looking at ways that that program can get more fully used. Because I do worry, as healthy as the financial markets are and as loose as financial conditions are right now, one place they're not loose is for small and mid-sized companies, particularly if they're in person-to-person contact industries. And the Main Street program, and if there's another round of the PPP, those programs are critical to helping those small, mid-sized companies get credit. And so I do think usage is important to look at there.
One visible aspect of what the Fed has done, at least according to investors, is the stock market. Do you worry that you're creating a bubble, however necessary your actions may be, but that it might...
I'm placing a stop on profit on euro at 117.31. So stop on profit for euro 117.31. It's right here. Okay.
Yeah, I think we'd be wise to be cognizant and concerned about the impact we have on risk assets. I think it's necessary, but I think it's very important that these programs have a sunset date, that the markets understand they're not going to go on indefinitely. I know we've just extended our 13.3 programs to December 31st, but I do think it's important that we emphasize these programs will sunset, they will lapse, because I think it's very important that these markets are able to function without Fed support, and I think the Fed support creates its own fragilities in the markets, and I think we should be very cognizant of that.
Can't let you go without asking about oil. Bankruptcies are spreading throughout the industry.
Well, position closed on euro, profit £200.
Gasoline demand in the United States has recovered now to, again, in the neighborhood of high 80s, 90% of a year ago. I've actually been surprised how strong demand has been, even with the resurgence of the virus. People are driving. They're not taking mass transit, and they're not flying, but they are driving their cars. I think, to your point, though, with the resurgence of the virus, the recovery in demand has stalled a little bit and is hovering around 90%. And at the same time, we've got all this excess inventory. You know, we had all this oversupply that had been built up because of the drop in demand earlier this year. And I think it's going to take till middle of 2021 for that excess inventory to be worked off. So you're going to have a very challenging energy industry and oil market probably for the next 6-12 months, depending on how the virus proceeds and how demand recovers, because we've got a lot of excess inventory and oversupply. I think it will begin to firm later next year, but in the meantime,